The stock is priced for perfection, at least into the quarter, but I think this story is very much intact, and I think that if the stock does act weak on this report, it's a buying opportunity. I mean, I think this is one you buy and hold for a very long term.
John Morris from D.A. Davidson's also with us. John, what's your first take? I know that consensus was about 16-17% revenue growth. You were optimistically looking for even a bit more than that.
Yeah, and they came through on the bottom line on the earnings. And while Liz is right, I guess I'm more cautious looking ahead and looking a little bit deeper. The Q1 was great. They came through. Even if there is a little bit of a cautious guide here that we're picking up on Q2, that's not different than we've heard from everybody else. But here's the thing. What about the back half? This stock is priced for perfection. It's a 50% premium to its growth rate. And I'm worried about the gross margin because you know what? The way that they're going to be able to get gross margin going forward is going to be on items or areas of growth that are a little bit more dilutive, like shoes, international, tops, and the men's business. They have indicated to me that they were pretty bullish about how strong their bottoms business had been. That's a margin driver. Those other ones I mentioned, they're more margin dilutive. I'm worried as the comps get tougher and gross margin in the back half, that could be a little bit trickier. So be careful. That's the only thing. Be careful, go forward.
So all the cautious analysts, Liz, on Lulu talk about gross margin and the fact that it's going to be very hard to sustain this double-digit comps growth at the same time as the very high gross margin, which is way higher than what we see from Nike or Under Armour or Adidas.
Well, this is a different business.
Is it possible for them to just achieve a new level of scale and keep up these margins?
Yeah, this is a different business than those other businesses because the vast majority of their business is direct to consumer versus those other companies that are trying to build that business. They had a little retrenchment over the last couple of years with gross margin as they fixed some of their quality problems, and now as they've kind of righted the ship, they are moving forward. And I think there is gross margin stability, maybe not a ton of opportunity, but there's also SG&A leverage, and they're guiding for the next 5 years for double-digit sales growth. Plus, they've initiated a buyback, so it's firing on all cylinders. And
strategically, what's the one move that they could make? They seem to have done everything right up until now in the last 3 years in the recovery. What's the one thing that they would announce that you would say, oh, that's going to be a mistake? Like what would worry you?
Well, some people are worried about them going into healthcare and sort of products that are way outside of yoga pants.
Wellness,
yeah.
But I think
luggage. Shoes?
I think health and wellness is a mega trend, and I think they're playing it in all of the appropriate areas. I really do think that they strategically test things and then scale them. And so we've seen it with men's. They built a men's business. Now they're saying men's can double. They proved that they can build a very viable, bigger than most people e-commerce business. They see a double in that. And international, they say quadruple. I think like a lot of these other companies, Nike, Under Armour, you look at what they say and what they're actually delivering, and it doesn't necessarily match up. Lulu has absolutely been delivering, and I think they've got a lot of opportunity to continue to do so.
John, quick final thought to flip it around. What would you need to see to get more bullish on the stock?
Well, I think to get more bullish, and I think that one thing, stretching the envelope here, would be if they announced a pretty big acceleration and expansion overseas. We'd like to get that international business profitable. I think they've got a lot of opportunity there. But back on that gross margin point, the one thing to remember is they are within 80 basis points of their all-time high on gross margin. That's like a 10, 12-year high. So while Liz is right, there's more room to go, I don't know how much further is beyond that. So that's what you got to have to watch in the back half. That's just the other side of it.